We're all going to die in the comfort of our own homes with the help of a reverse mortgage. Now, before you click off, pause, because this isn't necessarily about fear, it's about control. And the irony is, one of the most feared financial products in Canada might actually be the thing that lets people stay independent longer, not lose everything. So let's be honest about what people are actually afraid of. It's not death, it's not money, it's being forced out of their home, becoming a financial burden, and losing independence earlier than they should. If you were to ask any senior, hey, do you want to move into a care facility? What do you think they would say? They would say no. They would rather stay in their own home, age with dignity, in a place they're familiar with. And this is where the reverse mortgage gets wildly misunderstood. Most people hear the word reverse mortgage and immediately think, firstly, that it eats up all the equity and that there's gonna be nothing left for the kids. Second, that the bank owns your home, and then once you're in, there's no way to get out. And the truth is, none of that's true. At least not how reverse mortgages are structured here in Canada. So let's break it down and get factual. Yes, a reverse mortgage is an interest accruing loan. That means that the loan does get bigger over time. And it's only available to seniors. You have to be at least 60, 65 to even qualify for something like this. So yes, a reverse mortgage is an interest accruing loan. That means that the principal has the ability to grow over time. But that doesn't necessarily mean it has to. Also, keep in mind a reverse mortgage is only available to seniors, meaning that you have to be at least 65 to even qualify for this type of mortgage product. And fundamentally, the most appealing aspect to a reverse mortgage is that it allows seniors to access their equity without the traditional obligation of having to pay a monthly mortgage payment. It allows seniors to keep ownership of their home, stay living there instead of having to go to a retirement home, and gain financial flexibility by increasing cash flow and getting rid of mortgage payments. Now, you might have been curious. I said it doesn't necessarily have to increase the principal, and that's correct. The person has the ability to pay down the principal at any given point. If they don't want the interest to accrue every single month, they can make an interest-only mortgage payment, an interest plus principal mortgage payment. They can pay a little bit here, there, anytime. It allows the person complete flexibility. This alone changes the entire requirement equation for anybody that owns a home. And here's something people don't really talk about enough. Most retirees aren't poor. They're just cash flow constrained. With the cost of living going up in every respect and pensions and other forms of retirement income not increasing in the same capacity, cash flow is easily the biggest factor in a quality of life for someone in their retirement. See, they might own a valuable home, have a ton of equity, but live on a fixed income, pensions, CPP or OAS. And a reverse mortgage can remove somebody's monthly mortgage liability, immediately increasing their cash flow. And like I said, no payment is required, but it doesn't mean you lose control. It means you have the choice. So with a reverse mortgage, qualifying is mainly based on your age, the property's value, and a conservative loan-to-value limit dictated by the lender. And that part's intentional. Loan-to-value is capped specifically so people can't access too much equity too early. It's designed to protect the homeowner, not strip them of everything they've worked so hard to build. And here's a myth I hear all the time. It eats up all the equity. There's nothing to leave to my children. Let's unpack this myth. Yes, a reverse mortgage can accrue interest. And yes, that means the principal does grow over time. But here's the part people miss. Like I said, lenders cap the loan to value based on your age. The younger you are, closer to 65, the less you will have available to you. And the interest rate is generally comparable to long-term home appreciation, making sure that the loan isn't going to outpace the value of your property. So what this means is that the loan balance grows, but so does your property value. And the equity erosion is usually far less dramatic than what people think. It's not a runaway train, it's a controlled, capped structure. And remember, the amount you're able to borrow is limited by design. And I said it earlier, but nobody really realizes that even though no payments are required, you can still make payments towards your reverse mortgage and pay down the principal. You have the choice to pay the interest in principal, make a regular normal mortgage payment that's a composition of both, or just forget about it, not have any monthly liability and let the interest accrue. The flexibility is the point. A reverse mortgage doesn't force your hand, it gives you options. And this is, I think, the most important factor. An increase of your quality of life. Like I said at the beginning, if you ask any senior if they'd rather age in their own home or age in a retirement facility, 9 times out of 10, they would say age in their own home. And I see it often where people access funds for the purposes of hiring in-home care, equipping their home with different medical equipment or accessibility equipment, different types of home modifications, or even supplementing their monthly income, as you can structure your equity to come out to you in monthly increments rather than in one big lump sum. So instead of being forced to sell, people can stay in their home longer, happier, and healthier. And of course, the thing that everybody thinks about but no one really talks about is what happens at the end of life. Well, let me tell you, the flexibility carries through. The families are certainly not rushed to make a decision on restructuring their finances. In reality, the families are given substantial time to settle the loan, usually up to 6 months. They have the ability to sell the property or refinance. Refinance meaning someone takes on that mortgage. And in the case of refinancing, the penalties to break that mortgage are very modest, usually between 3 and 5 months interest. So yes, we are all going to die. But the real question is, how do we live before that? How much control do we keep as we go through our retirement years? And do we make decisions out of fear or understanding? So for the right person, a reverse mortgage is not a loss of legacy. It's a tool for dignity, independence, and choice. And that's a conversation worth having before you actually need it. So let me know down in the comments if you learned something new and if you had an opinion about reverse mortgages before coming into this video. But thanks for watching. Don't be a statistic. This is Enyo with Next Gen Mortgages, and I'll see you in the next one.